Why do traders do this? Hi, it's Charlie giving you the final video prior to Christmas here. So, why do traders insist on not using stop losses? It is the bane of my life. I come across traders and trading stories of people, traders who, let's forget the retail traders out there who just don't use stops because of emotional reasons. Let's actually look at the traders who don't use stops, who have actually come up with a strategy that they believe is going to be fine. They don't use stops. I've come across loads of those sorts of traders, from retail up to money managers as well. And there's not a single occasion where ultimately, in the long run, when they don't use stops, it ends up in blowing up, so to speak. When I say blow up, I don't mean necessarily they lose 100% of everything, but they blow up in a meaningful way. They lose over 50% of their capital, and then maybe they finally stop. And many times they do blow up. So why do they do it? Even the people who are sort of systematic in their approach, the problem is that you could make a case and say, well, you can trade uncorrelated markets, let's say. Well, unfortunately, correlations do come into line. So you can be trading uncorrelated markets, and there are times when they do become correlated. So you can be merrily trading away. I've got an example here for you. I've got a trader who has a system, and over the last 18 months that has made, with no stops, 50%. It's made a 50% gain over the last 18 months. So you're like, well, there you go, Charlie. It's proof that is it's a profitable system. No, it's not. I can pretty much guarantee that at some point in the next probably 18 months, that will blow up. It happens. I've just been around too long, and I've seen it happen time and time again. If you don't use stop losses, it's going to come back and get you at some point. And so if you something like this, it's a clever system, yes. But at the end of the day, it uses martingale, which is always going to be, a problem if you don't have risk management on it. With no stop losses and saying that, well, you've got non-correlated markets, well, black swan events happen more frequently than you realize. If you study your history and you look at the big case of the late 1990s, which was the long-term capital management story, when they thought they'd got the holy grail, so to speak, and then an event happened, a black swan event happened that threw their entire options model upside on its head, and they blew up. The fund blew up. So if you are a retail trader, which no doubt you are, like I am as well, just because I'm a professional money manager, I'm still trade my own book as well. If you don't use stop losses and you think you've got a system that works without them, be very, very careful, because black swan events happen more frequently than you think. So what's the point going for 18 months or 2 years or 3 years making money if at some point it's going to blow up? And I can pretty much guarantee to you it will. So what the advice I would give you, if you're thinking in this vein, is go and read the book, The Hour Between Dog and Wolf. Not Dog and the Wolf, just Dog and Wolf. The Hour Between Dog and Wolf. It's by Steve Coates. It's a great read. It's not necessarily about what I'm just talking about here, about not using stops, but it is talking about what bank traders used to get up to, and with the levels of aggression and risk management as well. And if there's no risk management, ultimately it will come back and get you. But the book talks about our biochemistry as traders, so it's a fascinating read anyway. But I implore you, if you're trying to design systems whereby you're trying to design systems where you don't have to have stop losses, or I would implore you not to waste your energy on it. I've seen over the years, time and time again, very, very clever people come unstuck by devising very, very clever approaches to the market without stop losses, but they always end up failing. There you go. That's my my last thoughts, I guess, prior to Christmas, but we'll be back next week.